We now have a framework for a Greenland deal that is officially on the table. The threat of the 25% tax on European goods has seemingly vanished overnight. And although we all knew that the taco trade was coming, we didn't know when it would happen. So today I'm going to quickly break down what happened, but more importantly, give you the 3 stocks that I'm looking at right now that I think are overvalued, along with a couple of trade ideas. Let's get right into it. So I was live trading the Trump Davos speech on YouTube, and we initially had a pump. When Trump was done, we gave back all of those gains, and it seemed like what Trump said was not enough to pump the markets. However, later in the day, we got reports that Trump had met with the NATO chief and came up with a Greenland framework, and the market then recovered. So it was kind of a yo-yo day, but ended in a green market with a lot of stocks going from red to green. Now, we'll get back to the stocks in a second, but basically here are the points of the Greenland framework. It's not really detailed, but it involves small pockets of land for the U.S. The U.S. is not going to be acquiring Greenland. They didn't even talk about that per the NATO chief. And here's the kicker, the real important part, in my opinion: the U.S. involved in Greenland's mineral rights. Now, in my opinion, as I've said before, this was not just about defense. There is something in place already since 1951 called the Greenland Defense Agreement, and it gives the U.S. basically unfettered rights to install as many troops or as much military equipment as they see fit on Greenland for defense purposes. That's already in place, and there's nobody stopping the U.S. if they said, hey, we want to station 10,000 troops there and put in a golden dome. So in my opinion, the acquisition of Greenland wasn't required under the Greenland Defense Agreement, but here the U.S. involves itself in mineral rights. We don't have the details of that. Duration of the deal has an indefinite time frame designed to block Russian influence in Greenland. U.S. Golden Dome system will be involved, and it opens a door to U.S.-backed infrastructure investment, which is another reason why I think the U.S. wanted Greenland.
Can you go into what you just talked about with the NATO meeting?
Well, we have a concept of a deal. I think it's going to be a very good deal for the United States, also for them, and we're going to work together on something having to do with the Arctic as a whole, but also Greenland, and it has to do with the security, great security, strong security, and other things. The
market, 600 points, getting back a lot of some of the nervousness we had in the last couple of days. The tariffs are off. Nothing happens on February 1st.
No, we took that off because it looks like we have pretty much a concept of a deal.
A deal of ownership, a deal...
Well, it's a little bit complex, but we'll explain it down the line. But the Secretary General of NATO and I and some other people were talking, and it's the kind of a deal that I wanted to be able to make.
So according to Trump, it's a deal that he wanted, and hopefully, but I'm sure the market is feeling this too, we can put this hoopla behind us. Now, as I said in my last video, I don't think that this was going to be the reason that we see a correction in the market. I still think we will see a correction in the market, and a correction in the market is never about one thing. It's a perfect convergence of technicals plus a slowdown in sentiment plus a slowdown in the news cycle, maybe a lull in volatility, and then you get something like either a reignited trade war of some sort or a military action against Iran, or maybe even something to do with the Japanese bond market. But we do have earnings coming up in the next couple of weeks with all of the Mag 7 besides NVIDIA reporting, and I think that there's no reason to believe that those companies will not blow earnings out of the water. Now, obviously, all eyes will be on CapEx because the market is just waiting for that one quarter that these companies announce that they're not spending as much as they did in the past on AI, which would indicate a slowdown in AI, which would indicate a popping of the bubble. But I don't think it's going to be this quarter. And before I get into the top 3 undervalued stocks, just a little bit of an update on the Supreme Court case related to the tariffs. It looks like that's going to be pushed out until at least February 20th at the earliest, if not early spring and potentially even summer. So I don't think we're going to hear about that for a while. Now,
Davos is where global powers meet. Head of states, central banks, CEOs controlling trillions of dollars, fund managers, market movers. This is where power really meets every year. And it's not about speculation. It's about giving signals. So when Trump says that volatility is peanuts in the market right now, well, that's confidence. That's not accidental. It's signaling that liquidity is on the way. And he's reassuring people be in the market. It's almost like last year when he said buy stocks now, and the market went on an insane rally. Of course, we know the market comes with ups and downs, but if you hear somebody say hey, it's going to double, then you know they know something we don't know. So let's talk about money. The money that's coming to the market isn't free. It isn't stimulus. This is your money being returned. And so here's what actually happened. Last year, tax laws changed, and they were made retroactive. But employers and the IRS, they didn't adjust withholdings in real time. We talked about this before. So all year long, Americans have been paying, well, more than what they should been. And that money been coming out your paycheck. So that means the government took more than it should have every single pay period. And because you just in the day-to-day, you didn't really realize, you didn't really understand it. Now let's fast forward to tax season. Trust me, this is going to all pay off. I promise. So those retroactive changes, well, they finally get reconciled. And suddenly people are getting much larger refunds this year. That's right, this year. Now, let's think about this for a second, right? Now, the House Speaker, Mike Johnson, just said yesterday that the average American can receive $4,000. That's $8,000 per household, if not more. That's just the money that's getting back. Then he said the total estimate could put refunds at over $150 billion. Now, let's be clear. This isn't the government giving you money. They already took that. They held it all year. They used it. They invested. They got their money off it, and now they are returning it. So here's the reason why Trump is really saying the declines in the stock market is peanuts. Well, it's because he knows what happens next. It's the same thing that happened during COVID. The money doesn't go into savings. It goes into retail spending. It goes into some people paying off debt. That liquidity then becomes money in the stock market. And when people think it's free, it becomes disposable money, which we know is not. This is really just delayed liquidity, y'all. It's not stimulus. And delayed liquidity hits the market harder because people weren't expecting it. And this is why Trump is calling the pullbacks peanuts. Nothing to be scared about. Because when you know billions of dollars are about to unlock, short-term volatility doesn't mean nothing. The money is already in motion. This money doesn't sit still. It hits consumer spending. It hits corporate earnings for Q2 and Q3. It hits equities before savings. This is exactly how 2020 started. Different cause, same flow. And now since we're talking about money, let's talk about two places I'm doubling down this year, for sure, without a shadow of a doubt. One is defense, the other is energy. Now, I've already talked about defense so many times. I put y'all on so many great companies from the defense perspective, and they killing it right now.